Hi Pips. Welcome to Pip Magnet Channel. The channel where smallest move can create big changes. The following topic is about not understanding trading versus investing. Many new investors don't decide their investment strategy beforehand. There are two main categories a beginner investor will fall into: trader or investor. While both trading stocks and investing in stocks are common forms of stock market investment, they differ in their execution. A trader is an active investor who quickly buys and sells stock positions to make profits. One way a trader is successful is through a high winning ratio. A trader who is successful in earning a profit on 60% of trades will do better than a trader that's successful with 30% of trades. The other important factor for a trader is the risk-to-reward ratio. If a trader buys and sells positions with a high profit potential and a low loss potential, they can average a higher return. A long-term investor uses a different strategy than a trader. First, an investor doesn't buy and sell stocks quickly. Rather, they buy and hold stocks for long periods of time. A long-term investor will more often use company financial information to decide if it's a good stock to buy. This includes finding companies that will increase their profits over time and sell at a favorable stock price. A long-term investor will buy a diversified portfolio of company stocks and attempt to grow that portfolio over years. If you begin investing without defining yourself as a long-term investor or a trader, it's very difficult to use a defined strategy to succeed. If you decide to both trade stocks and invest for the long term, you can separate your money into two categories and manage each portion according to your strategy. Whether you're a stock market trader or a long-term investor, many beginners make similar mistakes. Before you begin, decide if you will be a stock market trader, long-term investor, or both. Each of these has a unique execution, so it's important to decide before you start. Make sure you have realistic expectations when you begin investing in the stock market. Starting with the mindset of overnight success can be dangerous and lead you to take extreme risks. Start with a proper strategy. If you're a trader, focus on your winning percentage and risk-to-reward ratio. If you're a long-term investor, use strategies such as diversification and peso cost averaging. Risk is one of the most important parts of the stock market. Traders should focus on the percent of capital they risk on each trade. By limiting the percent of capital on each trade, you can prevent large losses and outsized risk on your trades. If you're a long-term investor, you can utilize strategies such as a diversified portfolio and peso cost averaging to better manage risk. If you like this video, please comment, like, share and subscribe to our channel. You may also hit the bell icon to keep you updated for more uploads.